Hello, my name is Fred Amaran. Welcome to College Affordability, a website designed to help parents and students lower their cost of education. Today's topic is student loans. As we said in the overview, there's 2 or 3 different types of student loans that are available for the students only. The first ones are the federal loans, and the first one is the Perkins loan. Again, you have to have high need or a lower income person is going to qualify for that. Also, the Stafford loan, which again, as long as you complete the FAFSA form, you will qualify for both of these. At a minimum, no matter what your financial strength will be, you will get a Stafford loan. One of the confusing parts about this will be, depending on the school and where you fought for financial aid, you get 2 types of Stafford loan. A subsidized Stafford loan, which means it'll have a lower interest rate typically, and also the interest is being paid while you're in school. The unsubsidized Stafford loan is a fixed rate of 6.8%, and the interest is being charged the loan while you're in school. You don't need to pay it, you can defer it, but it is being charged. The second type of loan, which is not a federal program, is private loans. You can go out and shop that around. These are typically loans in the student name with a cosigner, and the rate will be a variable rate based on the cosigners and sometimes the student's FICO score or credit score. So that's an important part. And the cosigners need to be aware that they are legally responsible for this loan also. There's a few states that offer some student loans also. Again, there are very few of those, but there are a few. And also some schools now have a program that they have loans available through the alumni and things like that, so you should look into those other programs. Here are some other things you need to consider when you go through or take on the loans. One, who is the person that's legally responsible? The loans here we're just talking about initially are for just the students. Is it a fixed rate? Currently at this time, there is some debate because the interest rates are so high for the student loans in comparison to the general market, that they're going to go back to the way they were back in the 2005-2006 range, where it was based off a variable rate and was locked for 1 year. But that has not changed as of yet. The federal student loans offer better repayment programs and forgiveness programs. And one of the things you also should consider, if you know, as we talked about earlier, of doing a full year cash flow for parents who typically you'd want to defer, taking on the loans. If you know you're not going to have enough money for the 4 years, we recommend that you take the money out under the student loans starting freshman year because of these better repayment programs and loan forgiveness that are only available to the student. Again, this will be based on the type of financial aid that you qualify for at each school. So if you don't qualify for aid, say you're going to a state school where your EFC number is over that, you'll qualify for the Stafford loan. But if you went to a private school, you may qualify for the subsidized Stafford. Each year, there is a limited amount. And again, you need to look at this as an investment in your future and what will be the payback. It's very, very important. We hope this information was helpful for you. Again, there's more information on collegeaffordability.com. And for more loan information, loan forgiveness information, please visit Repay 411. Thanks and have a great day.